There are always massive opportunities in the stock market, and I think there are 5 stocks that are set up to skyrocket in 2025, or at least in the next few years, based on their valuation, their growth, and the industry that they are in. That's what I'm going to dig through today. Now I'll put each one of these stocks in the timeline below. So if you want to skip forward to each one of those, you can feel free to do that. But I encourage you to just listen to all of these because I think there's opportunities in a bunch of different industries here. My name's Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And if you like these ideas here, check out Asymmetric Investing. There's a link on the screen and also a link in the show notes. That's my newsletter where I do deep dives. I've done a deep dive on every single one of these companies. I will also put those links in the show notes so you can get a little bit more information on why I'm bullish about each of these stocks long term, why I also own all 5 of these stocks as well. And thanks to this video sponsor, FinChat. The reason that I'm excited to work with FinChat is this is the research tool that I use constantly. How do I use it? Let's just talk about how I use it with a company like Hims and Hers. That's the first stock I'm going to talk about today. But I want to show how easy it is to research a company like this with FinChat. Just look at all of the information they have. They have this information on over 10,000 stocks all around the world. You can go in here, you can say, look at the price to earnings multiple, 76. Enterprise values to sales is about on a forward basis. That's based on analyst estimates for next year. Price to earnings multiple is about 65, and that enterprise value to sales just 3.8. So relatively cheap on a price to sales multiple, but that price to earnings multiple a little bit higher. What's going on there? Well, we can go into the financials. We can make charts very, very easily. Just look at this phenomenal growth rate. You got easy information like compound annual growth rate of 95% since 2018. But these are the things that I really like, and I don't think a lot of people know how simple it is to find information like their investor relations. You can find the earnings report, the transcript, the slides. All of this is in one place, and look how quick it is to pull all this up. You can find out who the owners of the company are. Look at this, Andrew Dudum owns $1.1 billion worth of Hims and Hers stock, about 8.4% of the shares outstanding. And here is something that I'm going to just show quickly because this is how you can quickly see just how much opportunity there is in some of these stocks. This is a modeling feature. And I'm going to just go in and I'm going to say, you know what? I think a 15% growth rate in 2026 is a little bit ridiculous. Let's go to 50%, maybe do 40% in 2027, 30 and 20. Also, management said recently, I'll go through some of this, that their margins are going to be increasing. So let's increase these to 10% in the out years and 12% and 13%. I don't think that's unreasonable. What is the upside for the stock if we do that? Well, based on this model, it says that the implied upside is 80%. So very simple feature to use in FinChat. You don't have to build professional models. It's got all the information built right in there for you. So let's go to that first stock. That is Hims and Hers. And like I said, I've got a deep dive that I'll put in the show notes. But I think the real opportunity here is this is a high growth company. Revenue grew 95% in the fourth quarter. A lot of that was because of GLP-1s, and that's what's gotten a ton of attention on the market. But this is really more than just a single product company. This is a company that's building a healthcare platform. If you go to Hims and Hers, you don't say, you know what, I just want GLP-1s. You say, I want to look at weight loss products that you have to help me reach my health and fitness goals. And they're able to answer those questions. They're able to connect you with a doctor and provide subscriptions if that's the appropriate solution. So as they expand the suite of options that they have and the things that they can treat, the opportunity continues to expand. Just look at this opportunity. You've got sexual health, dermatology, mental health, and weight loss that they're already working with. And they're adding more and more products in those specialties all the time and also adding the number of specialties. So what has that done? It's allowed the company to grow the number of subscribers who are using Hims and Hers and actually increase the revenue per subscriber and the average order volume. Those are the metrics that we're looking at as investors. And in 2025 and in the out years, management said that they're expecting to increase their margins by about 1 to 3 points each year. So this is a profitable company that is expecting to not only continue growing, but to get more profitable. What's crazy is just how quickly Hims and Hers is growing. This is management's outlook for 2025. Management expects 56 to 63% growth for the full year. 87 to 94%. A lot of that early growth in the early part of the year is going to be because of GLP-1s, but some of those products are going to be coming off in the second quarter, still expecting growth to be really solid in the second half of the year. So this is one of those companies, when you look at the growth the fact that they're building a platform, the fact that users love the product, don't churn out, and they continue to grow that user base. I think there's a phenomenal opportunity, and the stock is relatively cheap. If you look at something like the price to sales multiple, a forward price to sales multiple under 4 for a company that's expecting to grow in excess of 50%, you're not going to find a lot of stocks like that on the market. So I think there's a ton of upside potential. Absolutely going to be a volatile year for hims and hers, but I think this is one of those stocks that could absolutely skyrocket. I love the potential, and that's why this is one of the biggest holdings in the asymmetric portfolio. If you want access to that full portfolio, I will put a link in the show notes to that. That's a portfolio I started from scratch for asymmetric investing. Invest every single month, and I let subscribers know exactly what I'm buying before I buy it. Those buys for March went out on March 1st. Purchases were made this week. So I encourage you to check that out, become part of the asymmetric investing community. Let's go to the second stock. That is Portillo's, another company that I really like. And Portillo's, the story is relatively simple. People love their food and their restaurants are extremely profitable. The average Portillo's restaurant generates about $2 million in restaurant level EBITDA. That's a proxy for cash flow coming from restaurants. How profitable is that? Well, the average Chipotle makes just over $3 million in revenue. So Portillo's generating much more revenue per restaurant than Chipotle. Yes, it's a different business, but that just sort of gives you an idea of how big and how profitable this opportunity is for Portillo's. And let's just look at the basic story here. They added 10 new restaurants in 2024, still a relatively small chain, under 100 restaurants in total. And in 2025, they're expecting to add another 12 restaurants. Most of those are going to be in the South. They're moving into Atlanta. They're now building restaurants in the Denver area. Arizona and Texas are a couple of states that they've been expanding. So the opportunity continues to get bigger and bigger, and management is going to get better and better at operating these restaurants. Portillo started and really scaled up in the Chicagoland area, and that is really where they built their entire business. They haven't expanded to a lot of new locations until recently. And when you move to a new city like, let's say, Dallas, where they had a very, very profitable restaurant, but if you just have one restaurant, you still have to deliver food to that restaurant every day. You still have to do your advertising, and you don't have a lot of leverage on that advertising. So as they scale out their operations in each one of these cities and states, that's going to make their business much more efficient and much more profitable long term. They're generating enough cash flow to pay for their capital expenditures and build out this expansion. So I love where they're headed. Once investors figure out just how much people love Portillo's, just how much growth opportunity there is, could potentially 5x or 10x the number of restaurants they have over the next decade or two. I think this is one of those stocks that's extremely undervalued and will eventually get a little bit of love from the market. Number 3 is Disney, and Disney is maybe a little bit of a surprising pick, but it shouldn't be, because 2025 is the year that ESPN is going over the top. If you didn't know, Disney is actually the number 2 streaming company in the world behind only Netflix. So you have the really solid core business, particularly with their parks spitting off $9 to $10 billion worth of operating income each year. Then you have the studios and cable companies. Those are still profitable businesses. That's where the content churns out from. Cable, not the business that it used to be. Same thing with broadcast. But it is still a profitable business, and it's a core for Disney. But the growth story is really going to come from streaming. And I think ESPN is really going to change investors' tunes right now with ESPN Plus, Hulu, and Disney Plus. Disney has 203 million subscribers worldwide. I'm going to explain this kind of wonky chart here. They've changed the way that they've reported some of the numbers, particularly for Disney Plus. So what they've taken out recently, and this is why these blue columns are not included in a couple of these quarters, they've taken out some of those non-core countries. And so those are not included in these numbers. These are just the core countries, 125 million subscribers just for Disney Plus. I think the bundling story for Disney in 2025 and going into 2026 is just going to be phenomenal. The streaming business is already profitable, generating profitable operating income. Once ESPN starts to go over the top, that's going to be taken to another level. Here's the thing to look for. I think they're going to add some really interesting partnerships later this year. The one I'm watching is Fox. Fox does not have its own streaming network. As everybody builds out their streaming content, they want to get their content onto a streamer who makes sense, who's going to have the most subscribers and is focused on sports. It's going to be ESPN over the top. They are going to have the most money to pay Fox. That's going to bring more NFL content, more college football content, more of that high-end content that people are willing to pay for on streaming. I think that's going to make ESPN the dominant streamer when it comes to sports, and that's going to only help Disney be a much, much bigger company and solidify that number 2 position, potentially even make more revenue from streaming than Netflix by as early as 2026. So just think about that and how much opportunity there is for a stock that's currently trading for just 20 times forward earnings. I think the tune with Disney is going to change by the end of 2025. Number 4 is Zillow. They are building what they're calling the housing super app. They want to be the app that you go to look for a rental, to look for a new home if you want to buy a home, to look for a mortgage, and to list your home if you're looking to list a home. They want to be able to do everything in housing. And there's certain areas where they have some strong momentum that shows you this platform is really building out in a way that I don't think is fully appreciated by the market. The two things that I've been looking at recently have been the growth in the rentals business. Rentals is a solid growth business. This is primarily multi-unit rentals. They've also recently announced a partnership with some of Redfin's properties. So the rent properties is what they call them. That's giving Zillow much more power in the rental market. On top of that, they're growing in the mortgage market. This may not sound natural, but people actually go to Zillow and they look for homes, but then they wonder, how much can I actually afford? So what's the next question? Put some information in and let's see what kind of mortgage you actually qualify for. So if Zillow's actually qualifying people for mortgages and then is also pointing them to houses, that's multiple revenue streams you have. And then eventually they're going to build the whole ecosystem so you can do things like make an offer on Zillow, schedule your inspection on Zillow, do your title search on Zillow. All of those things should be happening on Zillow. That's the platform that I'm talking about. And for a company with a market cap of just $18 billion, this is a business that I think could be worth $1 trillion. Yes, I said $1 trillion if they become the housing aggregator over the next 10 to 20 years. So by 2040, this could be one of the biggest businesses in the world because that's how valuable the housing market is. If this is the place to go to for everything from rentals to buying to actually making transactions, that's going to put them in a phenomenal position. The final stock is really more of a value stock. That is MGM Resorts. This is one that can't get any love from the market despite the fact that it's a cash flow machine. Not building any new casinos in Las Vegas, not building any new casinos in Macau. Those are just money-making machines. And that money right now is going into buying back stock. That alone is a great reason to own MGM Resorts. They're going to be able to buy back 15 to 20% of their shares outstanding annually at the current stock price. That could be great fuel for the company going forward. But the two growth areas that I think are currently not really priced into the market are the iGaming business. BetMGM, which MGM owns 50% of that business, generated $2.1 billion worth of revenue in 2024. They also have their own captive business, which they own 100% of, that's opening in places like Brazil. Combined, management expects this could be a business that could generate $500 million worth of cash flow per year. So again, MGM's market cap, just $9.3 billion. That's phenomenal cash flow for a business that's that small. And that's just incremental on top of the existing casinos that are already generating cash right now. Operations in the BetMGM business were also accelerating in 2024, over 20% growth in net revenue towards the end of the year. So if that momentum continues in 2025, that could be a phenomenal business for them. And I don't think investors are giving them much credit for that. The other thing is the only casino being built in Japan is going to be 40% owned by MGM Resorts. That's going to be about a $10 billion casino when it's completed. They put most of the cash that they need to into that. But the opportunity there is just absolutely tremendous. Even just their 40% stake could be generating close to $1 billion worth of cash flow. If we look at other markets like Singapore, where Marina Bay Sands generating a couple of $1 billion per year in adjusted EBITDA, that's a proxy for cash flow. Japan is actually a bigger economy than Singapore. We don't know exactly what the gaming market is going to look like because there are not any casinos there, but the pachinko market is enormous. So I think this is going to be a phenomenal business, a phenomenally profitable resort. And you're basically getting it for free at the current price with MGM stock. So once investors start to realize that iGaming is going to be a really big business and that Japan is coming, that's going to open in 2030. That's not that far away by the end of this year. I think this is a stock that can grow on the back of buybacks, improved cash profitability this year, and just simply expanding multiples from appreciation for those growth factors long term. So the 5 stocks I went through today: Hims and Hers, Portillo's, Disney, Zillow, and MGM Resorts. There's a link to a deep dive I did on each one of those stocks below. So check that out. Of course, subscribe to Asymmetric Investing and look at my link for FinChat as well. As I highlighted earlier, all the charts that you saw on this video are from FinChat, and I showed earlier just how easy it is to use their platform. Phenomenally useful for me. I am a paying subscriber of FinChat, so I'm putting my money where my mouth is when it comes to that one. Let me know what you think of these 5 stocks. Which one is your favorite? Which one has the most asymmetric potential over the next year, 10 years, which is really the time horizon that I'm looking at. Love to hear your comments in the comments section below. And of course, subscribe here on YouTube. Thanks for watching, everybody. See you here next time.